The average American overpays their taxes by $3,200 every single year. Not because they're bad at math, not because they don't care about money, but because they're missing deductions hiding in plain sight. I'm talking about perfectly legal tax breaks that 73% of taxpayers never claim. Money that stays in the IRS's pocket instead of yours. Today, I'm revealing the 5 most overlooked deductions that could put thousands back in your bank account. And here's the crazy part. You probably qualify for at least 3 of them right now. Let me show you exactly how much money you've been leaving on the table. Before we dive into these hidden gold mines, let's talk about why this matters so much in 2026. With inflation still eating away at your purchasing power, every dollar counts. The median household is spending $2,400 more per year just to maintain the same lifestyle they had in 2021. So finding an extra $3,000 in tax savings? That's like getting a 5% raise without asking your boss. But here's what most people don't realize. The tax code isn't designed to hide money from you. It's actually packed with incentives to reward specific behaviors. The government wants you to save for retirement, start a business, invest in education, and support your community. They're literally willing to pay you to do these things through tax deductions. The problem? Most tax preparers only focus on the obvious stuff. They'll catch your mortgage interest and charitable donations, sure, but they're not hunting for the obscure deductions that could save you serious money. Why? Because it takes time, and time isn't profitable when you're charging $200 per return. So you end up overpaying year after year while these opportunities sit right there in the tax code. Let's start with the biggest money saver most people miss, the home office deduction. And I'm not just talking about full-time remote workers. Did you know that if you use any part of your home regularly and exclusively for work, you can deduct it? Here's where it gets crazy. This includes side hustles, freelance work, even managing your investment portfolio. Sarah, a teacher from Ohio, saved $1,847 last year by claiming her spare bedroom where she grades papers and creates lesson plans. The IRS allows 2 methods. The simplified method gives you $5 per square foot up to 300 square feet. That's $1,500 right there. But the actual expense method often saves more money. You deduct the percentage of your home used for business from your mortgage interest, property taxes, utilities, repairs, and depreciation. For a 200 square foot office in a 2,000 square foot home, that's 10% of all these expenses. On average, this saves people $2,100 per year. But wait, there's a trap most people fall into. The space must be used exclusively for work. That means no Netflix in your home office, no paying bills at your work desk. The IRS is strict about this. However, here's a loophole nobody talks about. If you're self-employed or have a side business, you can also deduct business use of your cell phone, internet, and even a portion of your homeowner's insurance. Deduction number 2 will surprise you. Educator expenses that go way beyond teachers. If you work in education at any level, from kindergarten through college, you can deduct up to $300 of unreimbursed expenses. But here's the twist. This includes coaches, instructional aides, counselors, and principals too. Mark, a high school football coach, claimed $300 for equipment, supplies, and books he purchased for his team. The IRS expanded this deduction recently, and now it includes professional development courses, software subscriptions for educational purposes, and even COVID-related supplies. The average educator saves $72 on their taxes with this deduction, but most don't even know it exists. And here's a bonus. This deduction is above the line, meaning you can claim it even if you don't itemize. It directly reduces your adjusted gross income, which can push you into a lower tax bracket or help you qualify for other income-based deductions. Number 3 is a goldmine for anyone who's ever looked for work. Job search expenses. Even if you didn't get the job, these costs are deductible if you were searching in your current field. Resume preparation, career counseling, travel to interviews, even the cost of a new interview outfit can be deducted. Jessica spent $1,200 on job search expenses last year. Professional resume service, LinkedIn Premium, interview travel, and career coaching. She deducted every penny. The catch? You need to itemize deductions, and the total must exceed 2% of your adjusted gross income. But if you're already itemizing for mortgage interest or large charitable donations, this can add significant value. The average person who claims this deduction saves $340, but I've seen cases where people saved over $1,000. Deduction 4 is perfect for our digital age. Technology and software expenses. If you use any technology for work, education, or managing investments, portions may be deductible. This includes computers, tablets, smartphones, software subscriptions, and internet service. The key is proving business use. Keep a log showing what percentage is used for work versus personal activities. David, a graphic designer, deducted 75% of his Adobe Creative Suite subscription, his new MacBook Pro, and even his high-speed internet because he works from home. Total savings, $1,650. But here's where most people mess up. You can't deduct 100% unless it's used exclusively for business. Be honest about the percentage, keep detailed records, and you'll be fine. The fifth deduction is my personal favorite because almost everyone qualifies: miscellaneous itemized deductions. While the Tax Cuts and Jobs Act eliminated many of these, several valuable ones remain. Investment advisory fees, tax preparation software, safe deposit box fees for storing investment documents, and certain legal fees are still deductible. Plus, if you're military, you can deduct moving expenses. State and local tax officials can deduct certain work-related expenses. The average savings here is $420, but it adds up. But wait, here's the game-changing strategy most tax pros won't tell you. You can actually amend previous tax returns to claim missed deductions. The IRS gives you 3 years to file an amended return. So if you missed any of these deductions in 2023, 2024, 2025, you can still claim them. I helped my neighbor reclaim $2,800 from the past 3 years using these exact deductions. The process takes about 45 minutes and costs nothing if you do it yourself. Now here's the part nobody talks about. Timing matters. Some deductions can be accelerated into the current tax year. Planning to buy that home office equipment anyway? Purchase it before December 31st. Need professional development courses? Pay for them this year instead of January. This strategy, called bunching deductions, can push you over the standard deduction threshold and unlock thousands in additional savings. Here's your action plan. First, gather all your receipts and expenses from these 5 categories. Second, calculate your potential savings using the IRS worksheets. I'll link them in the description. Third, decide whether to itemize or take the standard deduction. For 2026, the standard deduction is $15,000 for single filers and $30,000 for married couples. If your itemized deductions exceed these amounts, itemizing saves you money. Finally, consider professional help for complex situations. But now you know what to ask about. The biggest mistake people make? Assuming they don't qualify for these deductions. The tax code is complex by design, but these opportunities are real and available to ordinary people. Don't let another year pass, leaving money on the table. Your future self will thank you for every dollar you keep out of the government's hands and in your own investment accounts. If this helped you discover money you didn't know you had, smash that like button and subscribe for more money-saving strategies. What deduction surprised you the most? Drop a comment below. I read every single one and often turn your questions into future videos.